Thank you very much, Mr. Rao, for joining us here on NDTV. Pleasure to have you on the show. Infosys, when came out with the second quarter earnings, one thing which really got everyone nervous, especially the street, was your guidance. Why was that slightly lower? Is there some demand scenario which is looking weak at this point in time? Why did Infosys do that?
No, I don't think we changed the guidance. From a constant currency basis, we retained the guidance. We had said we'll grow from 10 to 12%, and that's what we retained. We just had to make adjustments for the currency thing, and so that was the only reason. So it looks like, at least initially, people didn't understand. They were thinking that we were guiding low, but that was not the case. From a constant currency basis, we are still 10 to 12%. And from an outlook perspective, quarter three is, from a seasonality perspective, it's a relatively slow quarter for Indian IT industries, and so from that perspective, it will be a very soft quarter for us. This is a quarter where you have furloughs and impact of lower working days and so on. But overall, we are very confident about meeting our guidance, and we had also said next year we'll get back to industry growth rate. So right now, we seem pretty confident on the back of a very good first and second quarter.
What is the demand outlook in different regions, especially US? What kind of demand you really anticipate from there as compared to the first half of the year? Do you see more orders really coming through at this point in time?
I think by and large, geography-wise, we are not seeing too much difference. We are seeing good traction both in Americas as well as in Europe, even in rest of the world. But because of currency, particularly in Australian dollar currency reasons, we are seeing lower growth. But otherwise, on a constant currency basis, from a geography perspective, we are seeing all-round growth. From an industry perspective, again, by and large, barring couple of industries, energy continues to be challenged because of low oil prices and a lot of focus on cutting cost. And the other sector which is probably challenged is telecom, where again all the telecom players are struggling with it, both top line and bottom line, so they're trying to figure out new ways of revenue generation. But barring those two, we are seeing fairly good traction across other industries and across geographies.
Any pricing pressure probably that you're facing as far as competition is concerned in a bid to gain more market share?
I think this industry, one part of the industry over the last couple of years, we have seen commoditization. The business operation side of business, there's tremendous amount of pricing pressure. And that's something, that's an area where we are trying to counter by improving productivity through automation and so on. So that part of the business, there is definitely pricing pressure, and that's not new, but that's been there for the last 1 or 2 years, and it's not going away. But in the newer areas like digital, like analytics and so on, we don't see much pricing pressure. It's more about solutions and more about capability and so on.
There are also some voices coming which indicate that IT spend is not growing globally as much as it should or was growing till now. What's the real sense, and how are the things on the ground right now?
The IT spend is, we normally look at IT spend as a percentage of revenue. From a percentage of revenue perspective, we are seeing almost flat. We are not seeing any difference. There may be within a sector, there may be some variations from one company to the other. But by and large, it remains same. But from an absolute perspective, there's an incremental spend, because as companies grow as a percentage of revenue spend on IT, the incremental dollar spent on IT also grows. There's also repurposing of spend. On the basic operation side, people are not seeing value. There is tremendous focus to cut cost and so on. And they are repurposing the savings into newer areas, as I said, about digital, mobility, analytics and so on.
And what's the outlook as far as the digital segment is concerned, considering now that's something with which not just Infosys but all other IT players are also going to be focusing on. So how are you looking to tap that opportunity? How much of your revenues actually come from that segment right now? Future plans, growth outlook for the digital space?
I think digital is an area of growth. We don't really spell out how much money we frame from digital, because there is no clear understanding at the industry level what is digital.
Okay.
So in the absence of it, it's like comparing apples to orange. So we don't really break out, but we are one of the leading players in the digital, and across industries we are seeing a lot more adoption of digital, lot more opportunities for digital, and we are one of the players there, and it will continue over a period of time. And going forward, I think this will morph into work around Internet of Things, machine-to-machine communication and so on. So those are all areas where we see opportunities for growth in future.
What kind of investments can we really expect from Infosys in the digital space in Indian market and otherwise?
In the Indian market, obviously, there is this Digital India initiative. So we are looking at opportunities where we can contribute. It's early days because this is something which has got launched recently. But from a global perspective, we continue to invest in building capabilities. We continue to invest in, we have a $500 million startup fund. So one of the areas we are looking at investing in startup is startup with focus on the digital space. So those level of investment, both in terms of capability building and investing in startup ecosystem, will continue and is a key element of our strategy.
Is there any number probably that you can give us as far as your digital spend that's going to be is concerned, say in the next 1 year, next 5 years? How much are you really looking, how much have you parked away for your digital business particularly?
I mean, as I said, it's difficult to do because there is no clear definition of digital. See, every industry is looking at digital in a big way. I mean, if you look at earlier, it started with the retail industry where whichever is consumer-facing industry, they had the first wave of digital thing. But today, when you look at banking, when you look at manufacturing, when you look at a lot of other industries, a big part of their spend is around how do they engage with customers better and how do they engage with consumers better and so on. So there's a lot of effort in terms of refurbishing their existing systems, making them more amenable for digital and so on. So it's part and parcel of many of the services that we deliver to the customer. So in the absence of a definition, it becomes difficult to carve out and say how much is digital.
It's not just about big IT players like you. We are seeing many mid-sized and small IT players also trying to make the most of this digital opportunity. Do you see some bit of competition only in the digital space from that end? Do you really see that?
No, I think, I mean, this is an era where we believe that there will be a lot of players, a lot of startups with interesting ideas, small players, and it's an ecosystem play. I don't think single provider can provide everything that the client is looking at. So there is opportunity for us to partner with many of the players in the ecosystem. One of the advantages we bring in as a company is when we work with startups is we can help them in their engineering, we can help them scale, we can bring them access to customer, which otherwise is very difficult. So I think this is an era where we have to embrace working with partners.
So are you considering any partner or a tie-up or probably an acquisition in this space anytime soon?
No, we continue to look for this one. One of the acquisitions which we did was Kava about 2 quarters back. So they are in the mobility space, digital and mobility space. They have a platform which enables retailers to sell online through mobile channels. So that's an acquisition we made about 2 quarters back. So we continue to look out for opportunities where we can accelerate our capability and market share through acquisition.
So are you still looking out in talks with somebody? Anything that you can share that we can expect probably in the second half of the year?
I mean, it's always an ongoing thing. As we said, it's part of our strategy. We said by 2020 we will become $20 billion, and out of which we clearly said about $1.5 billion will come through acquisition route. So it's a very clear element of the strategy. So it's on ongoing basis. So it's difficult to say when we will close, but in the last 2-3 quarters itself, we have already made 3 acquisitions, and we continue to actively look wherever it.
So no number you would want to give us at this point in time?
No.
Okay. How about attrition? That has been another cause of concern. Has it now stabilized? Our companies, is your company taking a lot of measures at this point in time to control that attrition rate?
I think attrition was a concern about a year back, but in the last 2 quarters, it has come down dramatically. Last quarter, on a quarterly annualized basis, attrition was 14%. This quarter, it is about 14.1% or something. Historically, it is between 13 to 15%. So we are back to where it is and where we are comfortable with. And we have taken many steps over the last year in terms of engaging with people, addressing many of the hygiene issues. So there's a tremendous amount of excitement within the company with all the initiatives and so on. So I think challenge of attrition is behind us very clearly. We are extremely comfortable where it is, and we are very confident going forward it will be under control.
Okay. Also wanted to have a word on the European market. Are you seeing some bit of slowdown out there? What kind of demand outlook do you have as far as Europe is concerned?
Actually, in the Q2 recently, Europe actually grew faster than North America. So
okay.
From a growth perspective, Europe, we saw better growth. It's about 23% of our revenues today. Today, unlike in the past, today I think there is much more openness and propensity to outsource and offshore. So we are seeing good opportunities across sectors. Financial services, we are seeing good opportunities in Europe. In the retail space, we are seeing good opportunities. In manufacturing, in the auto space and in the core industrials, we are seeing good opportunities. So I think, there are enough opportunities. It's an untapped area, but today Europeans are more open to outsource and offshore, and we are seeing decent traction there.
Are you also involved in any way as far as GST in India is concerned for the infrastructure? Tell us more about it and what's going to be Infosys' role going forward.
Yeah, we were awarded the technical partner to develop the IT systems for GST. So this award was given about a month back. So we are right now in conversation with the GST in terms of requirements and the next phase. Obviously, we have to wait for the bill to get passed through the parliament. But from our perspective, we are ready. We understand what is required. We are working closely with the GST team in terms of trying to develop the software and deliver it.
And how soon can that happen if we do see that getting passed in the next session of the parliament?
I think they have a very aggressive timeline because once the bills get passed, they want to get it up and rolling. In the
so
next
will it be
3
ready from your side once the bill gets passed?
We have time. Once we signed up, we said we will do whatever it takes to accelerate and get it done. Unless there is too much delay in the bill passing, then we may have a challenge. But at this stage, we are confident that we'll be able to work with them and meet whatever timelines they are looking at.
So confident that if it does get passed in the next session of the parliament, then 1st April 2016 is the deadline for GST, something that we've been looking forward to. That will be met, at least from the infrastructure, the IT infrastructure side.
I think, some part of the thing, whatever is minimal required to get it up and rolling, I think we have no option to get it ready whenever it's due. But it will be then developed and deployed in a much more phased manner.
All right, Mr. Rao. Thank you very much for talking to NDTV.
Thank you very much.